8 Proven Investment Strategy During Recession. Recessions are caused by more than just weak economic growth. Numerous broad job losses, fewer open positions, and more government support, such as stimulus payments and higher unemployment benefits, are sometimes present alongside them. If you're new to our channel, please subscribe and click the notification bell button to be notified whenever a new video is released. In light of all of this, you might question if investing makes sense if we're in or are headed for a recession. Is it better to keep all of your money in cash rather than investing it? It's simple to forget that what goes up can also fall down while the market is booming. But because economic slowdowns are frequently cyclical, there will likely be another recession in the future. It is wise to be ready for it, whether it is imminent or yet some time off. By doing this, you'll avoid taking part in the frantic exodus out of stocks and into cash. Instead, you'll keep in mind that stocks can still perform in a downturn if you know which ones to buy. You may create a recession-proof investing strategy with the aid of a financial expert. Here are 8 proven strategies to invest in when a recession hits. Number 1. Seek out core sector stocks. You might be tempted to give up on stocks during a recession, but experts advise against doing so. There are frequently a few industries that push on and offer investors stable profits even when the rest of the economy is in trouble. So if you want to use equities to protect yourself against a recession in part, think about investing in the healthcare, utility, and consumer goods industries. Regardless of the situation of the economy, people will continue to spend money for food, power, household goods, and healthcare. Therefore, these stocks typically perform well during busts and underperform during booms. Number 2. Emphasize trustworthy dividend stocks. A smart strategy to create passive income is by investing in dividend-paying equities. You essentially obtain a share of a company's profits after investing in it. It is generally advised to seek for businesses with low debt-to-equity ratios. You might want to limit your attention to only fully dependable businesses, or those that have increased their dividend payouts for at least 25 years straight, just to be on the safe side. Number 3. Think about purchasing real estate. Even though a severe recession can result in significant losses for many businesses, real estate is typically not one of them, provided prudent investments are made. Home values typically decline during recessions, giving you the opportunity to purchase a house at a lesser cost and resell it for a higher price once the economy and markets have recovered. You can generate dependable passive income while waiting for the project to be finished by renting the property out to a renter in the interim. Number 4. Purchase precious metal investments. During market slowdowns, precious metals like gold or silver frequently do well. However, because there is typically a rise in demand for certain commodities during recessions, their prices typically increase as well. There are numerous ways to invest in precious metals. Purchasing coins or bars from a vendor or coin dealer is the simplest option. Although this is not the same as purchasing a security, it is still a viable choice. ETFs should be your focus if you're more interested in purchasing precious metal equities. These funds are assemblages of investments made in a specific sector, in this case, the market for precious metals. If you're saving expressly for retirement, you could also buy a gold IRA. Number 5. Investing in consumer staples in the equity market. According to the previous point, it is a good idea to concentrate on consumer staples or necessary goods that people will need and buy, regardless of their financial status, when looking for safe investment possibilities in the equities market. Typically, they consist certain household products and food and beverages. Number 6. Focus on non-cyclical recession-resistant industries. It is recommended to stay away from cyclical products and services during uncertain times. Consumers will spend less money on these non-essential items less frequently, maybe as a result of the time of year, the typical household's current economic situation, and a variety of other variables. It is important to concentrate on identifying non-cyclical industries that provide products and services that are in steady, year-round demand during a recession. Along with the aforementioned consumer staples, these recession-resistant sectors also include the supermarket and discount retail sectors, alcohol producers, cosmetics, and funeral services. Number 7. Ensuring sufficient diversification. I'm reminded of the proverb, "Don't put all your eggs in one basket." Even though a sector includes the aforementioned consumer essentials, it is wise to avoid putting all of your money in it. This is particularly crucial during an unexpected period like a recession. If a certain product or industry loses value, diversifying your business across industries will shield you from suffering higher losses. Diversification among asset types, such as equities, in addition to fixed income and commodities, is equally crucial. Number 8. Invest in yourself. Investing in yourself can help you bounce back if you lose your job and income during a recession. You might return to school to learn new things or hone existing ones so you can land a better job. If you are concerned that your employment status might deteriorate at some time, paying off debt is another choice. During an economic crisis, you'll feel less anxious if you have less money to spend on bills. A coming recession shouldn't worry you if you're investing for the long run. To remove some earnings from the equation, you could choose to sell off some investments. However, in most cases, your strategy shouldn't be to sell at a loss. You might believe that you can enter again once prices stop dropping, but a bottom cannot be called until it has passed. You should keep the positions you took as long-term investments instead. Having said that, if you have money to invest, you might want to think about purchasing industries that will fare well in a downturn, including consumer goods, utilities, and healthcare. Long-established businesses that can weather a downturn are a common characteristic of stocks that have been paying dividends for many years. Please share this video so others can make use of this and know the different ways to prepare for a recession. Thank you.